Hi everyone, my name is Dusan Kovacic and I'm the Chief Investment Officer in the Rockaway Blockchain Fund. Let me start with a personal story today. When I was 15, I started playing World of Warcraft and I spent actually 6 years in the game. During this time of growing up, I was not able to develop my social skills, so please bear with me during this presentation. But anyway, coming back to the World of Warcraft, it was really a place for me to focus most on my free time on. So when I was not doing my homeworks for school, I was playing WoW. And it really became a place for me to make friends and to have fun and also to make first money, either by farming in-game consumables and then selling them on the auction house or by trading the auction house by itself. You could pretty much sell into increased demand on certain times. For example, on 7 p.m. on Sundays, because people were grouping together to fight dungeons, and they wanted to boost their characters with short-term consumables, and you could pretty much sell into this demand. And I was also part of such group. It was a group of 40 to 70 people, which was attempting to compete on the European and also on the server level by competing to kill the bosses, which were dropping unique items which boosted the characters either in statistics or also in visuals. Yeah? And given I was always on the front edge of having the best gear in the game, I became quite, I would say, socially recognized and a celebrity back in the days. And where do we have the clicker? So the reason why I'm so excited about NFTs and about the creator economy today is because I see the history repeating itself. Though this time at much larger scale than when it was back in the World of Warcraft days. Owning a rare weapon or a legendary weapon in WoW, I see has a very much similar social benefits than owning a Bored Ape or CryptoPunk these days. But when we look at the distribution, it's completely different. So, and maybe you might ask, like, what's the utility? And it's all about like the digital flex. So the World of Warcraft at its highest peak had roughly 10 million monthly active subscribers that were distributed among multiple, I would say, tens of servers. Though, if you look at the current state of NFTs, there is already 4 million active holders with reach to about 300 million users. That's the maximum, because if you look at the platforms, only Twitter from the traditional Web2 companies, which has around 300 million users, added NFT support. But as we see the market growing, we are seeing also other big corporates like Instagram working toward NFT support, which will increase the social reach to 2 billion users. Looking at the digital flex factor right now in WoW, it was really like 10K people, and already the account with the best gear had like value of thousands, or if not 10,000s of euros. Right now we are looking at NFTs, which can reach 300 million users, and the best ones are valued. For example, the Bored Apes we will talk about. At the floor prices are somewhere around $300,000. But anyway. We see this massive growth to be coming, and the main driver is the social flex at this stage. But we will talk about that a little bit later. Looking at the numbers by today on gaming, we are still quite early in blockchain. There is only 1.4 million daily active wallets that are related to blockchain gaming across all blockchains. But it has already outgrew DeFi, yeah, which has right now 1 million active wallets. The gaming sector has grown 43x since last year, so I see it's a massive growth. I would say the largest in this segment. The other use cases that we are seeing for NFTs are in finance, as most of the contracts in financial sector are unique. They will play. This could be represented as NFTs on chain, and we are seeing the decentralized finance space is growing significantly as well. So from the last year, it grew from 12 or 20 billion of total value locked until 210 billion what we have today. The third use case that has become very popular in the last 2 years is collectibles. And it all started with CryptoPunks, which is a set of 10,000 pictures minted on Ethereum blockchain. It's head of characters. They were initially collectibles valued at few $1,000s maximum, and everybody thought the people paying such prices are crazy. But the most rarest ones, for example, today, are being traded for millions. Yeah? There are only 3 alien CryptoPunks available, and one of the alien CryptoPunks was sold recently for $23 million, just for your information. But what we are actually seeing is there is an increased demand for these collectibles, which are slowly transforming to digital brands. And as Victor has mentioned, we are seeing the transformation of collectibles, of people who are holding those assets into a social clubs, where being part of the club equals having or owning one of these items. The most recognized one is Bored Ape Yacht Club. They just raised $400 million at $4 billion valuation from Andreessen Horowitz. The company that created Bored Ape Yacht Club is called Yuga Labs. They have 92% profit margin, and pretty much the company was founded 14 months ago. It's really impressive how such a large business can be created in such a short amount of time. And the last segment that we are excited about in case of usage of NFTs is digital art. Why NFTs matter in relation to the digital art we will cover shortly. I would like to also invite you to see our digital art exhibition downstairs. We have 6529 Digital Art Fund presenting their pieces. We have Zankan, who is one of my favorite artists, showcasing his pieces downstairs, and also Marcelo Soria Rodriguez. Feel free to check them out and chat to the representatives. But before we jump in to the panel, I would like to also explore 2 verticals that we will have experts in. The first one will be digital art. It will be Jeff Benman, partner at 6529 Digital Art Fund, coming on the stage shortly. But before Jeff comes on the stage, let's explore this sector. So you may ask, like, why is blockchain relevant for digital art? And it's actually quite simple. For the creators, it allows easy access to the audience and to execute primary sales, and also allows to collect royalties from secondary market resales. Typically, when there is a secondary market sale on a decentralized marketplace where the art is traded, the royalties for artists range from 2.5% to 25%, depending on how the artist defines the royalty fees during the creation of the art. For the artists, it's pretty clear. For the collectors, on the other hand, there are 3 major benefits. It's easy to authenticate whether the art that you are collecting does actually belong and whether it is authentic. Ownership. You can, if you have the private keys to the art, you pretty much own the piece. And provenance, you always know who owned the art before you. So you may think the digital art market is pretty small, and you would not be probably incorrect. There is the total value, the total market cap of all the digital art is estimated to be roughly 2.3 billion, which is like only 0.1% of the overall art market that is estimated to 1.7 trillion. But if you look at the creators, there are already rock stars in the digital art market. For example, the most recognized ones are Beeple, Pak, Tyler Hobbs, or Dmitry Cheniak. If you look at the concrete pieces, for example, Every Days from Beeple was sold at 69 million at Christie's last year. Or Pak has done a primary offering on Nifty Gateway for 92 million in total. It's the single largest primary sale offering for digital art. We also see Dmitry Cherniak and Tyler Hobbs having combined value of their art around 100 million. It's a generative art. generative art is actually a new category of art where blockchain has the 0 to 1 effect, because the generative artists are not creating the piece itself. They are creating a code that has a set of variables in it, and the buyer is, during the time of purchase, he's buying one call of the code. And as soon as he pays to run the code, there is a random set of variables created that are inputted into the code, and it generates a very unique piece. And Tyler and Dmitry are part of this type of art. There is also a room for new infrastructure to be created. I'm mentioning here Artblocks because it's the largest platform by size in terms of primary sales for curated generative art. Up to this date, it has generated 1.5 billion in sales. And as I mentioned, Tyler and Dmitry were offering their art through this platform. And the second case study, the second area we will have we will talk about gaming. Especially, we will focus on the Sandbox platform. We will have Robbie Young, the CEO of Animoca Brands, and there is no better person than Robbie to talk about gaming. But before we jump into the discussion, let's have a quick view on what the Sandbox is. We are seeing the Sandbox. It may seem as a game, but it's a virtual world that is designed for brands to connect with their customers in a way where a brand or pretty much anybody can acquire a land piece or land tile in the game and develop their own unique experience that is focused on their customer base. For example, we are seeing Snoop Dogg selling tickets for his virtual concerts that will happen in the Sandbox, and he's also developing his own experience. We are seeing Deadmau5, we are seeing Walking Dead, Atari, Adidas. All these brands are already working in creating their own experiences in the Sandbox game. They bought the tiles, and they are now creating the content for their users. If you look at the market cap of the Sandbox token, it's roughly 10 billion. That means there is a lot of expectations on the platform. Because if we put it into the perspective of users, there is only 5,000 users that are transacting inside Sandbox that is reflected on Ethereum blockchain, which is roughly 2 million on valuation per one user, and that's pretty crazy. If you look at the tile costs or tile prices, they are traded for a minimum of $8,000 per one. But let's stop talking and let's invite Jeff and also Robbie on the stage. So welcome, and please introduce yourself briefly.
Great. Good morning, everybody. Great to be here. Wonderful that we're all convening in person. I'm Jeff Bandman, COO and General Counsel of the 6529 NFT Fund and 6529 Capital. We're one of the first, let's say, institutional funds investing purely in collectible NFTs.
Hi, I'm Robbie Young. I'm the CEO of Animoca Brands. We make games, and we also do strategic investments off our balance sheet.
Thank you very much for introduction. So let's start with a very simple question here. How are you looking at blockchain relevance and importance at first, Jeff, digital art, and then in gaming?
We're at a really incredible inflection point, and what you're really looking at in terms of blockchain and art or collectible art is a transformative model, not just for the art itself, but for the entire ecosystem around it. It's a vastly superior model to kind of the traditional models on a number of levels. So maybe to take as a starting point, art has always evolved with technology. You can see it in a number of historical examples. And then typically when it does, it is denounced by critics as not being art. And when that happens, you're sort of onto something. So about a year ago, in February 2021, the New York Times art critic said, hey, NFTs are not art, just as Impressionism was denounced as not real art, photography was denounced as not real art, Jackson Pollock, Andy Warhol, Haring, and Basquiat. But we are at a revolutionary inflection point in the adoption of crypto And that is part of why the relationship of blockchain and art is there, because now people are talking about, and they're excited about, not just the consensus mechanism or the protocol or the Byzantine generals problem, but they're excited about the outputs. There's emotion and passion around these NFTs in a way that you didn't really see about other parts of crypto. If you look at how our lives have changed over the last 5 to 10 years, they obviously have gotten more and more digital in many ways, some of that accelerated by the pandemic, but that genie's not going back in the bottle. And if you think ahead to the future, we expect our lives will indeed get more and more digital, the technology will get better and better, and as people spend more and more of their time in these digital spaces, they will want digital objects that reflect their individuality, that their tastes, their personalities, their friends, their pets, their clothes, other things. And so NFTs will be a vehicle to do that. And I think particularly for younger people, having digital possessions is a very natural thing. I think one other observation I would make is that it really is an absolutely transformative and superior model for collectors, for artists, and for the general public. So for collectors, you can have ownership, issues like provenance. When you buy something, how do you know it was really signed? Whereas you can see every single step of the provenance along the way, and as well there's transparency in pricing, transparency in fees, obviously the cost of shipping, although people complain about the price of Ethereum and gas, compared to ensuring shipping, storing art. For artists, it's amazing. They can have global access to their work. They control it in terms of the royalties, in terms of production. And then for the general public, only a small amount of traditional art is available in, museums or galleries or private collections. Whereas, if I or my colleague 6529 buys an NFT, the entire world can see it and form enthusiasm and social constructor around it. So it's a vastly superior model. It's one of these Pareto optimizational things that actually is a win-win for everybody, where nobody loses, and it is transforming, I think, the world. So hugely important.
Cool. So I'll take over the game piece. So I think from the perspective of games, what our mission is really to bring digital property rights to gamers. And I think if you think about the role that games play in our sort of public consciousness, Benedict Evans a handful of years ago said that gaming is eating the world, and basically he was just talking about the fact that gaming had overtaken all other forms of entertainment in terms of size of revenues and audience, etc., largely due to mobile smartphone adoption. And as gaming has kind of subsumed all other forms of entertainment, it's also, we believe, doing the same thing for blockchain, meaning that gaming, we think, is going to be kind of the tip of the spear for blockchain adoption in the mass consumer market. And we've seen that with smartphones, we've seen that with televisions, we've seen that with all kinds of other technologies where entertainment content has caused mass consumer adoption. People don't get excited about better ways to do their banking services and things like that. That's not why people adopt new technology. They want to watch movies and play games and have fun. And we think that blockchain is no different. And when we think about the thesis for games, what people have been doing in games since the free-to-play model was created over a decade ago, first on desktop and then on mobile, people spend virtual currency in games to buy virtual items. That's the foundation of a $200 billion a year industry. And what we're doing now with blockchain is essentially doing exactly the same thing. So we tokenize the in-game currency as a fungible token, an ERC20 typically, and then we tokenize the in-game content as NFTs. So people spend tokens to buy NFTs inside games, and we're not actually asking consumers to change their behavior at all. They get the same benefits that they've always had in games, with one exception, which is that they actually own the stuff that they buy in the game. And this is a fundamental shift. So giving them these digital property rights means that they have agency over that content. They can trade it, they can sell it, they can destroy it, they can do what they like with it. It's their content. And so we move from what's essentially been a rental ownership economy, and that $200 billion a year game industry is a rental economy where essentially players are only getting time and enjoyment, which is hard to quantify, in exchange for the money that they're spending, to an environment where they can actually get a return. And when I say return, the important distinction is you know, some people will make money. We have play-to-earn games, and we have people who make lots of money, you know, trading in-game assets. But more importantly, they won't lose all their money, right? Because if you play a game today, you spend all your money. You get zero back, and that's true of every single game in existence. But in blockchain games, you have the chance to sell your secondhand stuff, which means there is a residual value for everything. There will be a secondhand market, and that's incredibly exciting. Anyway, I'm going to stop there because I could talk about games all day long.
So let's look at the Sandbox, which is the flagship game or product Animoca is building. For me, when I was playing around the Sandbox, like before our speech yesterday and a few days before, it felt like an in-game experience, but what I was seeing was a virtual world where that is focused for the creators, in this case brands, to develop experience on. So the way how I understood it, ultimately, it's you are aiming for a new era of commerce rather than entertainment. Can you elaborate on that?
I think the best way to think about it, and this phrase gets widely overused, but is more true in blockchain gaming and entertainment than previous types, is it's about community. And so the idea behind the Sandbox is that, you know, I think the project has had some modest success so far as a result of building a very strong community over several years. You know, the game has been in development for 4 years, and that's you know, an idea that's not widely publicized because people forget that big games are hard to make and they take time. And the idea behind building that community and bonding them together through that shared building and play experience, it's a building experience similar to like a Minecraft or a Roblox where, you know, users are encouraged to create their own user-generated content inside the Sandbox. And that shared experience bonds the community. And so the revenue model and the commercial aspect of it is once you create a strong community that wants to spend their time there doing stuff, then you open up the avenue to have commercial opportunity, brand sponsorship, selling e-commerce, et cetera, because the community is there. And so I think in the game community on blockchain, you will see all the most successful projects ride on the back of strong community creation. We saw this with Axie Infinity. You know, people talked a lot this past year about this incredible success of Axie Infinity, and fundamentally, that was built on top of a community that had been years in the making, a very, very strong, you know, feverish fan community, and you can build great game and revenue experiences on top of that community.
But on the other hand, I would say Axie has a lot of strong Ponzinomics in its design, which also brought a lot of attention. And at some point, you know, it transformed the market, the work market on Philippines. We can talk about it later. But wasn't the Ponzinomics the like of product market fit of Axie, or are you believing that Axie already found the product market fit?
I think Axie just tried to make, I think this team at Sky Mavis tried to make a really fun game. And they have more tools at their disposal because they have blockchain. And I think the exciting part is that the users figured out how to make money. The users figured out how to trade things. The users figured out how to create a guild system to onboard users for whom an upfront cost of an Axie was too expensive. That's the difference with blockchain, because the developer doesn't need to do 100% of the ideation and creation of the product. Users can build really cool applications that ride on top of that. And this actually leads to your intro about Bored Ape Yacht Club, because the reason that community has accrued so much market value is because of the potential for people to build exciting stuff on top of it. I mean, I just saw yesterday somebody's opening a fast food outlet in California themed with his Bored Ape Yacht Club because his ape, you know, he owns the IP for that. And that was part of the thesis of distributing the Bored Apes. Okay,
so let's jump into the art. So as we discussed, there is a market cap, combined market cap of all the art pieces estimated to around $2 billion. And this has grown like within the last 2 years. Jeff, you are managing a digital art fund. How big it can get?
Yeah, we feel that it's almost impossible to be sufficiently bullish about how big this can get. we really feel that, you know, this is the moment. You know, think about, you know, kind of antique stores and, you know, versus eBay. You know, this is really art's internet moment, and, you know, we believe the new model will completely flip in the traditional thing. And, you know, part of it is, as you and Robbie alluded to, is, you know, the ability to grow these, to grow these communities. So let's break that down. a little bit. So we do have actually a somewhat higher internal view of the current size of the NFT market, including its subcategories. So we think the whole market, including the profile pictures or avatars, like the apes or the punks or whatnot, that the total market cap is in the range of 20 billion, and then some of the subsets, the generative art and other crypto art subcategories that are reflected in our investment portfolio collection is probably in the range of, let's say, $6 billion today. But whatever those numbers are, as you pointed out in your presentation, Dusan, it is currently a very, very small fraction of the total art market, which I think you estimated at 1.7 trillion. But I think the other very important relationship to consider, and I'll go through a couple of metrics on this, but the NFTs are very, very small in market cap compared to fungible tokens or crypto tokens, which also today have a market cap in the range of 1.5 to 2 trillion. That number obviously fluctuates. I think I saw in Forbes yesterday it was closer to 2 trillion. So the whole NFT category is probably today around 1% of the fungible coins market cap, and the art NFTs may be kind of a third of that. So we actually think that this relationship is the single biggest mispricing in kind of crypto and blockchain today, and we believe it's inevitable that over time this gap will close, from where it is today at less than 1% to 10% to 25, then 50%, and we believe in the long run it's actually inevitable that the NFTs in the aggregate will carry more valuable than fungible tokens. So NFTs are, let's say, a superset of those, but for people who are used to investing in financial markets, you're used to things, or we're used to things being kind of commoditized and fungible, but in fact, most of the world is non-fungible, and so the kind of digital items that reflect that, your clothes, your pets, we talked about that a little, but also real estate, buildings, and whatnot. That actually is a much bigger set of things, and we think over time in the digital world those will catch up with each other and at least achieve parity, and perhaps NFTs will be greater. In terms of metrics, we really think that in terms of the kind of the digital art, we're somewhere around Bitcoin 2013 or 2014. What metrics do you look at? The number of wallet holders, it's still a little bit cumbersome. That's going to get easier and easier. Ways to view them, that will improve. 2.5 million people signed up for Coinbase's waiting list. But ultimately, there's 4 billion people in the world who already have internet connections, and that's only going to grow. So, we believe that as a general category, NFTs will be kind of the financialization and transport level layer from Web 2 to Web 3. And the last observation I would make in this category is we also think it's an area where power laws will apply. Power laws clearly apply to tech. Who's the number 2 Twitter? Who's the number 2 Facebook? Power laws also apply in art. This is sort of a blending of art and tech, and so we do think, in fact, that the kind of elite, top quality, best pieces will not only have provable scarcity, but will gradually separate over time from sort of the floor apes and floor punks and entry-level things to be almost an asset class of their own that will have accelerating value over time.
And Jeff, you are mentioning power laws, and I think it also, it definitely applies in VC as well. But if you are looking at the portfolio of VC funds, they have like 40, 50, 60 investments. But applying on NFTs, you can invest into 60 early-stage artists, and they can all be zero. Because, from the top projects that or from the top artists that we recognize, maybe there is like 5 of them that generated like 80% of the combined sales on the primary market. So how does that how is this power law distribution actually affecting your investment strategy?
Yeah, that's a great question, and we think that every day there's lots of new NFT collections being created, and there are billions of NFTs right now, and there will be trillions in the future, and they will become more and more ubiquitous, and they will be some will be much more kind of practical or utility token like. Others will be collectible, and the value of most of those will trend towards towards zero. And I think when the Bored Apes were first minted, you could have bought it for 0.08 ETH or something like that at the beginning. And then there are lots, and if you did that, you obviously did extremely well. But a lot of other projects created around the same time, which you could have bought for the same thing, have stayed at 0.8 or 08 ETH or have gone down from that. So the focus of our fund, we think that this is the best trade in terms of expected value for institutional investors. Is our focus is to utilize a collective investment vehicle to focus on it, collecting the top pieces, the most elite pieces in the most in the best collections, diversified across. We see there as being three main categories: the profile pictures or avatars. There's the generative art. You gave some examples like the Tyler Hobbs Fidenzas or Dmitry Cherniak or the Meridians. And then sort of one-of-ones, individuals, so artists like an X-Copy or Ferocious, which are much more like that. And even within that. Our focus is not just to collect any old piece within those, but to collect the kind of most elite, rarest, and we sort of view the world now, there's, let's say, 20,000 pieces that we would consider in that sort of most desirable collection, which we would consider sort of blue chip NFTs based on kind of existing artists and existing work that's been created during this, this formational foundational period. And so, so there's kind of a small amount of those, and then within those there's, maybe of those 20,000, 2,000 we would call Grail, and 200 that we would call Ultra Grail. A lot of those pieces have already been collected by long-term collectors who got in early and seeded away. And, we believe there's sort of a unique point in time right now in 2022, which is our current investment thesis, to collect up as many of those pieces as possible with diversification. And already it's gotten harder for an individual to do it. So we would certainly encourage any individual to start collecting, dabbling, get more informed. But some pieces in our collection, some of them start around, let's say, kind of 70 to 110 ETH. Probably the most expensive piece we bought was around 1,180 ETH. 1,180 ETH for a zombie punk. So, I think it's hard for an individual to, invest at that level with diversification. And, plus because NFTs are harder to invest in. Like, if you had a thesis around, around Agoric or Solana or Bitcoin or ETH, you wouldn't need somebody else to really help you necessarily invest in that. If you want the diversification in NFTs, because they are so individual, you really need a collective investment vehicle to get exposure to that in size. And so we do invest a small percent in the fund in kind of new projects, but we believe the best expected value today is to acquire as many of those elite pieces as possible and diversified across the three main sectors.
Okay, Jeff, thank you for your insights. So let's jump back to gaming, Robbie. We have 1.4 million users according to the analysis of DubRadar across all blockchains.
Yes.
Does this number reconcile with your numbers?
I think it's probably about right. I would have said that I'd put the number at less than 5 million, honestly, because we've seen, some games have a lot more users than other. I'm going to single out Bojena, who's sitting in the front row from our studio GameE, because I know she has at least 2 million.
Okay.
So that disproves
that's a good alpha.
And I think that a lot of that tends to be driven also by platform. So to the extent that blockchain games are available on mobile platforms, they tend to be liable to have much wider distribution because mobile is a much bigger platform in general. So I think one of the things that has held back widespread adoption has been reliance on having browser-based activities. But I think, our thesis is that long-term all games will be blockchain games. I mean, we talk about it now as if it's a feature, just the way 15 years ago we talked about online games as being a feature because they were online. But we don't talk about that anymore. It's just part of the plumbing. And so we think blockchain will be the same.
I remember in the World of Warcraft era, like the peak was 10 million subscribers on a monthly basis. I think it was the third data disk. We are seeing you are saying like up to 5 million, 1.4, the data are showing on my end. But if you are looking at the owners of NFTs, it's roughly 3.3 million. If you look at the crypto wallets, it's 300 million. But if you put it into the context of like the traditional games, like Roblox, which is 200 million users, or Minecraft, 140 million, it seems like so small. So what do you think will bring the massive user base?
So I think right now the audience is characterized by a very, very different kind of group subset of people. So if you look at blockchain games today, they tend to have a much higher spending audience than traditional games. And I'll give you a very simple example. You know, if you look at mobile games, Candy Crush, for example, is one of the most popular mobile games, about 270 million monthly active users. The average user in Candy Crush probably spends anywhere from 5 to 6 cents per month. And that's based on only 2% of the users paying. Whereas in a typical blockchain game, the average user probably spends $25 to $30 per day, right? And when you compare that level of spending, you can see why such a large market is being driven by a relatively small, by gaming standards, audience base. But I think also what we see is the most important sort of factor in our sort of positivity about the prospects of this is that if you look, for example, and I'm picking on you, Božena, sorry, about, for example, what happened with the launch of Arcade on mobile is that the majority of people who are coming onto this new mobile blockchain game experience were new to blockchain, right? We onboarded more new users to Polygon than any other app previously. And I think that's very important because the thesis, again, for games is to bring new users into blockchain, not just to cater to existing crypto people.
But you are saying, there is a higher spending in blockchain games, like 10x or 20x higher. But isn't it because there is an expectancy of the residual value from the purchases?
Of course.
To be kept? But eventually, this spending will not be going directly to the platform that has created the experience, but it will be transformed between players, and the value itself could probably range on the same amount that could go to the company. Is that your view as well, or do you have any other?
So when you design a blockchain game, it's very different than a traditional game. So a traditional game is like having a storefront where you sell things to players and you keep, the highest possible margin that you can. In a blockchain game, you're designing an economy, and your job is to promote the GDP of the economy and then levy a fee, typically 5%, on all the transactions that occur within that economy. And so you're trying to promote the growth of a community and a healthy economy because it will be self-sustaining. And your job then is just to enable it by creating new content experiences, marketing it, etc. But you're only taking a very small transaction fee. And if you have a healthy economy, then I think, as we've seen, obviously, with Axie Infinity, the numbers can be quite big.
And I think, this is, at least I see this opportunity as very obvious, like that the web will transform together with the financial layer and ownership layer, with the social, and into a virtual world.
Yes.
I think you see it, and also like Facebook or now Meta does see it. So how big the competition actually is? Are you feeling that you are competing for the same customers as the metaverse Meta is doing, or is it a different bucket?
So I think, and all the blockchain people in the room will appreciate this, I don't feel like we have competition, because part of the spirit of the blockchain industry is that it's about interoperability and the fact that we all work together. And we benefit from the fact that we can interoperate our content, and even at the most simplistic level, our fungible tokens together from game to game and application to application. So when we first created our F1 Delta Time game based on Formula One, people started, buying F1 cars and then taking them over to Niftyfi and putting them up as collateral for DeFi loans, right? And that was a service that had nothing to do with us. It was just something cool that Niftyfi created and decided to accept our assets as collateral. And those kind of things happen throughout the blockchain game industry, which is another reason that we also make investments in DeFi protocols and other things that may not be considered traditionally game related, because in blockchain everything is related. And that's the exciting part. That's why I think we get this incredible network effect where we can all work together. To go back to your question about competition, I think the only presiding fear we have for the industry is that we want it to remain a multi-chain and open ecosystem. We think this is really important to the health of the ecosystem. And so the fear is that a very large entrenched player like a Meta, for example, will seek to provide the blockchain, and convince consumers that their most likely closed blockchain platform is going to be the best for consumers, because we think openness is actually the secret to our success.
And that's like similar approach than what Mythical Games is doing, correct?
Yes, they're becoming more and more open with every day.
Okay. So, like having you experts from like digital art space and also from gaming, do you foresee that these two worlds will merge because of the composability element of
Absolutely.
the NFTs?
Absolutely.
And what would be...
And one of the first things that people did in Decentraland and the Sandbox was make galleries to show their art.
Yeah, I know, but I mean, it was a very simple use case where that couldn't attract a lot of attention, but eventually, I think the social factor of the show-off will eventually drive a lot of these blue chip pieces into these metaverses. The question I'm always asking myself is like, what is the experience that will be the experience, to showcase these blue chip assets in the virtual world? What are you thinking, Jeff?
Yeah, so, I think we're sort of in the, in the very, very beginning phases of that. And first of all, I just want to say that, Robbie, we at 6529 agree very strongly with the importance of the open metaverse. We're like very mission-driven around that. We think that's very important. So, we think that the technology is getting there in terms of, how people experience NFTs. But it is going to improve. We will shortly be unveiling. We've been working with on Cyber on some sort of new ways to display some of the work that's in the 6529 Fund and 6529 Museum. By the way, the reason we're called 6529 is our kind of founder is sort of known on crypto Twitter as Punk 6529, pseudonymously. And for people who want to sort of learn about more about NFTs, it's good to follow Punk 6529 and others is a great learning source. So, I think the technology for viewing it and experiencing it will improve. Something that, may sound really simple, but most people probably, look at NFTs either on their phone or maybe on their desktop. There's some nice looking monitors downstairs and they're like this. But NFTs, like, when you look at them really, really big, particularly like the generative art and the one-of-ones, it's a transformative experience as well. If you look at it on a 85-inch screen as opposed to a smaller one, but the galleries are getting better and better, and sort of in the as things develop and as the technology gets better, and we get more three-dimensional type viewing, I think that will also just increase people's appreciation. And I don't know if anybody here was at in Miami in December for Art Basel, but we helped sponsor an Art Blocks display of generative art. And one of the squiggles, we show it on one of our screens downstairs. So squiggles are just like, they look kind of like slinkies, and they're different colors. And there's a series of 1,000, about which 800 something have been minted, but they have colors that go like this. But so, it was displayed as a hologram that you could see kind of revolving around. And, I'd seen the squiggles before, but seeing it displayed this way, rotating around, it was just mind-blowing. And so I think that as kind of the hardware and the speed of compression, and partly it's because the way an NFT is rendered, it's sort of, when you click on it, it's essentially redrawing it from the beginning, so that takes a lot of computation, but that will get better and better and faster. And, I think, kind of global appreciation as more and more people start to view them, in these different environments, and the gaming environments and different, virtual worlds, or just on their own personal devices. It will, the exponential growth of appreciation will, again, be transformative. And, and artists will be able to find their audiences globally, which is anyone with an internet connection, in a just robust way that capitalizes on that technology. So that really is the future.
Is there any questions from the audience? Okay. There is one, yeah.
Question to Jeff. How do you value the fair price of digital art? Is there a method? Do you have a way to say this is the good price for this CryptoPunk?
So I think if I heard the question, there was a little echo. It's like you're asking how do we sort of determine, when we're, let's say, buying, how do we determine what the right price is?
Indeed, yes.
Okay. Yeah. So there are a lot of inputs to that. I mean, first of all, kind of one set of inputs, but by no means the only input is, you can see the trading and price history of, every piece, and if it's a piece that's part of a, by a particular artist or part of a series or, kind of a particular set, like, for example, we have a number of Tyler Hobbs Fidenzas and incomplete controls in the museum and in the fund. So, one of the inputs is just kind of past sales of individual, and you can see literally every transaction, not just the final sale piece, but all the bids and offers. So one of them is around that, and secondly, I think there's an element of judgment, rather that involves sort of the aesthetic qualities, kind of the sense of is there a possibility of how much social construction might form around it as more and more people get exposed to it. So there's a couple of factors like that. When our investment team is looking at something, we sort of try to think into the future, and obviously you can't predict these things. But we ask ourselves, is this something that could achieve a 5x, 10x return? Is this something that will build? Then we look at other things like kind of comparable works by similar artists. So some of that is like traditional investing, but we really, we do think a lot of the sort of value over time for NFTs will be the social construction. We see these as forms of memes, and 6529 recently put out a tweet kind of looking at the royal shield William and Kate. And all the different symbology on that. That's a kind of PFP or avatar too. It has that sort of visual symbolism. So we look at kind of the comparables, the bids, what's been bid, what's been paid, how that's performed over time. We try to project appreciation into the future, but then also kind of part of the way we've been finding that we've been doing acquisitions for the more elite pieces is we're sort of buying them OTC directly from collectors. So often there's sort of the headline price, but we can often negotiate a better price because we kind of know the personalities of the collectors and have the ability to execute rapidly. But I'd say the last observation I would make is because of other things that are homogeneous rather than that are heterogeneous rather than homogeneous, it is kind of harder. And that's one of the reasons why if someone who's investing kind of a significant institutional size investment benefits from doing it through a collective investment vehicle instead of individually, because even if you decide you want to buy a Fidenza, like is it the best Fidenza or one of the top ones, and then where should the price be, and it is challenging.
Thank you, Jeff. This has been an amazing discussion.
Do we have time for one more question? Or?
One more, yeah, let's do it. I mean, sure.
So I was wondering in the blockchain space, what's your view on the yield guilds and what impact they're going to have on the space in general, and which ones would like?
Sure. Well, I'm not going to make investment advice. We love guilds, obviously, and guilds serve a very interesting purpose because essentially it's an aggregate of professional players that are organized, and they choose which games they'd like to play. So we work with lots of guilds. We've invested in probably a dozen of them ourselves. And they're fantastic ways to build community because it's almost like, from the perspective of a developer, it's kind of a B2B relationship. You're working with another sort of corporate group of players. It's like an esports team, if you will. And there's also often a commercial relationship between the developer and the guild, because the guild will seek to invest in the playable NFTs in the game, which give them access to their player base to play in the game. So I think for games also who are looking for ways in which to sell their NFTs and to bootstrap their games, then they can also work with guilds to help them do that if they have a successful PDE economy built in.
Thank you very much again. It was a pleasure to have you here. And now I will leave the word to Mark to follow up. Thank you, guys.
Thank you.
Thank you. Thank you. Thank you, Robbie.
Thanks.